Today, we're diving into the intriguing world of Keith Gill, better known as Roaring Kitty. We'll discuss his latest colossal investment move, how it might be bigger than we initially thought, and what's coming up in his content pipeline. There are some exciting hidden YouTube videos and live streams to look forward to. Let's unpack the details. Hey, welcome to AMC Daily. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads, and also enter our giveaway. But everyone remember, this is not a financial advice video. Unusual Whales recently broke the news on Twitter that Keith Gill, aka Roaring Kitty, has filed an SEC Form 13G for Chewy, ticker symbol CHWY. He has acquired 9,001,000 shares, which constitutes a 6.6% stake in the company. A screenshot circulating on Twitter shows how Keith humorously modified this SEC form to confirm he is, indeed, not a cat. This filing reveals his significant shareholding in Chewy, sparking many questions and speculations. Amit raised an interesting point about the funding for this purchase. With 9 million shares of Chewy, assuming an average purchase price of $20 per share, that totals around $180 to $200 million. Given that Roaring Kitty had $262 million worth of GameStop shares and only $6.3 million in cash, it leads us to question where the funds came from. Did he sell a significant portion of his GameStop shares, or did he have other sources of cash? Some speculate that Roaring Kitty had additional cash from previous successful trades and withdrawals. This means he could potentially hold both $260 million worth of GameStop shares and $200 million worth of Chewy shares, totaling nearly $500 million. Another possibility is that he sold some GameStop shares to fund this massive Chewy investment. We might get more clarity in his next financial update. Boss Blunts provided insight into why Roaring Kitty might have chosen Chewy. He pointed out that the XRT outfit, which holds Chewy as its top holding, has a massive short interest of over 500%. In 2021, we learned that hedge funds use ETFs to manipulate stock prices. By shorting the ETF and buying shares of certain stocks within it, they can drive those stocks' prices up, causing the ETF to adjust its holdings and push other stocks' prices down. With Roaring Kitty acquiring a substantial amount of Chewy shares, it could disrupt this manipulation tactic. This action is creating trouble for those playing the FTD game of hot potato. It's a strategic move that has far-reaching implications. Josh shared a screenshot hinting at 2 hidden videos on Roaring Kitty's YouTube channel. These could be new live streams, like the one he did a few weeks ago, or videos about GameStop, Chewy, or something else entirely. These hidden videos are likely to be released soon and could cause significant market reactions for both GameStop and Chewy. Citron Research and other short sellers are already feeling the pressure. Citron tweeted that it's unlikely Roaring Kitty used his own money for the Chewy investment, suggesting he might have sold all his GameStop shares, which still wouldn't cover the cost after taxes. They emphasize the risks of following Roaring Kitty's aggressive investment style and suggest looking at more stable stocks like Occidental. However, it seems like a desperate attempt to divert attention from GameStop and Chewy. Citron's recommendation of Occidental, a stock with minimal growth compared to potential short squeeze opportunities, highlights their anxiety. They are trying hard to convince investors to abandon the volatile stocks and opt for safer, but less lucrative, options. In another twist, Roaring Kitty was recently sued by a retail investor for alleged manipulation. This shareholder held only a few GameStop shares, making it seem like a baseless lawsuit possibly orchestrated by short sellers. Interestingly, this lawsuit has already been dismissed. A screenshot shows the voluntary dismissal notice, highlighting the frivolous nature of the claim. Quiver Quantitative tweeted about this lawsuit, contrasting it with the legal freedom politicians have to engage in insider trading. Politicians can buy shares based on privileged information without repercussions, whereas retail investors face lawsuits for discussing their stock positions online. This double standard in the financial world raises important questions about fairness and legality. Conclusion: the moves by Roaring Kitty are not just significant, but also strategic, potentially reshaping market dynamics. His latest Chewy investment, hidden YouTube content, and the reactions from short sellers paint a vivid picture of the current financial landscape. As we wait for more updates, it's clear that Keith Gill's actions will continue to captivate and influence the investment community. Guys, that's all we have for you today. What is your opinion about AMC stock? Get involved and let us know in the comments down below. Thank you for watching.